Okay, let me show you something. Those of us who are struggling building an account, probably you do not have enough fund to trade and you've been struggling blowing your account and because of the instrument you trade, look no further, come to Deriv Synthetic and then trade only fee 50. Okay, now that's going to help you to build without too much stress. And I'm going to give you a strategy. Of course, every of my trading is price actions, basically support and resistance strategy. They may tell you it's obsolete, no problem. You're not in competition with anybody to make money. First, you're going to look at the market. You come in, of course. Yeah, sometimes they'll tell you to look at the daily time frame and all of that. Your money is small, so you have no job with daily time frame. You just need to establish higher time frame of your trading time. Now, most time your higher time frame is going to be 15 minutes because you are going to be trading with 1 minute. Or you can take your higher time frame to be 1 hour because you're going to be trading with 5 minutes. So you're going to be working with this. All right. So now let's go. This is V70 as 50, not 75. Don't trade any other one, just trade 50. If you want to complement, you can trade 25, but sometimes 25 can be more deceptive. Let's look at it. Now, this market is an uptrend, right? Look at it. It's an uptrend. This is 1 hour time frame. It's an uptrend. Forget about this inducement that happened here and all of that. So this is an uptrend. Very, very obvious that's an uptrend. But the market seems to now want to start reversing from this point. So how do I establish that? Very simple. Now, this line you're seeing here is 50 moving average. Then you can complement it with MACD. Very simple. Now, you want to learn more about how to use all of those things and settings to look out for, then you can inbox me and I'll put you through on how to go about it. Now, I've discovered that, okay, this market is an uptrend, but however, it has swept this liquidity because, right? And then this is a key level that I've marked before, right? So it has swept that liquidity. That means the market need to reverse, okay? That means the market need to reverse. And so, but you have to be very snappy and quick to making your decision so that you can maximize everything, right? Okay. Let's go here, do something. Okay. So you have to be quick to make decisions, maximize your profit as much as possible. So now let's go. Now, if I go, this is 1 hour. So ordinarily, I should be trading on 5 minutes. That's what it means. If I'm looking at 1 hour. So here, even though we've discovered that this is an uptrend, so I'm going to do something very importantly. Now I'm going to mark this recent high, right? This recent high and this recent low. All of these are internal liquidity. This is a high and this is a low. So expect the market to travel and break this structure and continue its journey. But there's something happened here. Something happened here. Instead of continuing its journey, it did something very quickly. I just want to navigate to right. Let's go. So you know you are trading with $5 or $10, okay? So you are going to be scalping, but I don't want you to go to one that will be dragging you unnecessarily. So even you're going to hit stop loss will not be too bogus. That's what I'm trying to achieve, putting you through on V50. All right. So now let's go. Obviously, this market's reversing. You can see that, right? How do I know? Now I've marked this point and marked this point. So let's go quickly. Let's mark all those points. So I actually use a channel, parallel channel. So I'm going to mark this point here to here. Okay. So my strategy is support and resistance because I trade price action, obviously. Okay. So now what you just do is just to mark a relevant point. Okay. So I mark this relevance point. So if I need any other point, so I can just clone it and take it there. So let's work with this guy here. Okay, so let's extend it out. Okay, now we've done that. So very simple, right? So now you find a trade range, all right? You have found a trading range for your market. Now, depending on when you come to the market, so here I can still mark this point. So you can have to mark every relevant pivot point, okay? So you can have to mark every relevant pivot point. So let me just take this now, and then I will just adjust it. You get it? So I just mark all of these relevant pivot points so that this market that's coming here, you probably will be targeting here. So now let's quickly go to 5 minute ordinarily, which is the internal structure for 1 hour. Okay. So now I go to 5 minutes. So see what has happened. I go to 5 minutes. And there are some things you want to do because this market gain is another market on its own entirely. So sometimes not respect total liquidity concept or price smart money concept that you probably want to have it. It can give a different stuff. Let's go here. Okay, so now what we're going to do is very simple. Now I'll go to 5 minutes. So what I want to check in 5 minutes to see that is this market going to reverse at all or not. So, but waiting for 5 minutes will take my time not to find a trade early. All right. So although it's just like about to break the 50 moving average, which is supposed to be when you're supposed to be taking a trade, okay? Because you're using 50 moving average when it crosses it. And then when it's trending, if you return back to it or break it and bounce, you are entering and stacking into your positions. All right. Now, but here, this has not happened. Now you go to 1 minute. So 1 minute is an internal structure for, so 1 minute is an internal structure for 1 minute is an internal structure for 15 minutes ordinarily. So let's go to 1 minute. Good, fantastic. So look at 1 minute. Now, ordinarily in 1 minute, let's look at something very importantly. Even in that 5 minutes, so there's something you may check. Let's go clearly look at it. All right. If you look at your indicator, right? I'm not saying you should rely on indicator. You just use it as a support to make decision. Look at it. Look at your MACD. It's already crossing over. Now, this is like a kind of divergence on 5 minutes. All right. Why is it divergence? The MACD is creating a what? A lower low, while the market is creating a higher high. Look at it from here. Okay. So you can take it from here, take up from here. Look at it. You get it now? So this is a bearish divergence that the market has actually created. Okay, so now let's look at in the 1 minute. So if we go to 1 minute, you will have seen this early enough. Okay, so now in 1 minute, the market is obviously so this is what I draw on 1 minute. Number one, I've seen the market crossover, right? Um, the market have rejected at this point. That is on this key level. That's not the issue. Now, I want to see a structure. Now, what's the market structure here? This is a high, this is a low, this is a high, this is a low. Okay? If this is a high, if this is a high, this is a low, and another high here, another low here. Then this is another high. This is the highest. So if this is the highest, no problem. Now, what we want to mark is to mark this high and this low, and then this high. So what you want is that the market should do what? The market should take out this, all right? The market should take out what? This low. And so when the market take out this low, so you are not talking about price action now, okay? All right, smart money concept. Now, and it's still in combination price action. So because the market structure is what you are using to do all of those things we are doing. Now here, the market has crossed this is a low, this is a high, this is a low. So the market has gone up and scooped this low. And then in smart money concept is called MSS, market structure shift, or what they call choke, change of character. Now, since it has taken this, but see where your 50 moving average is good for you to an extent, is that here, what I expected is to look up to where there is gap. If it's forest market, this has to be respected, right? So, well, these are simulated environment. Okay, so there are things you have to do. But remember, what you're looking for is to make money. Now, here, I expect the market to come back here. Probably maybe it's still going to play out that, I don't know, but I expect the market to come back to fill this gap. Okay. So if it does not, see what will happen. The market return back. I haven't taken out this. This is a low, another low created, right? So this is a low being taken by this. Then the market pull back and then got rejected under 50 moving average. So it never traveled back up here. However, you are waiting for it to buy here or take a position here, the market refused. So immediately it got rejected at this point. Sometimes it could get rejected at this point. I didn't get up to this point. Get rejected here, can get rejected here. So whichever way, you are meticulous and you don't do other thing when you are trading this, just face on this instrument alone while you are trying to build your account. So immediately you get rejected here. That means your entry after this rejection, look at this candle. After this rejection, your entry perhaps could be the close of this candle. But you see, these candles may not be your entry. Can I tell you why? How can I enter a market? This candle, how can I enter a market with this candle? Because this candle is a down close candle. It's supposed to be an up close, right? So you can't enter it. So you can see now. So you are waiting for another candle. So it's possible your entry will be here because this is strong. We have three major candle. We have shift control candle. We have strength candle, and we have indecision candle. So like this is a strength control. It's a candle, strength candle, strength candle. This is kind of shift because it's having a down close, and so that means supposed to be traveling up. All right. So now you are waiting. This is a strength of okay, I'm going down. So that means after the close of this candle is your entry. So you are now entering here, taking a short position from here. And where should be my stop loss? To be very conservative, because you have to consider your money too. To be very conservative, I want to take above this, maybe because I'm still saying it may come back to this point. Do you get it now? So I may say it may come back to this point, and that's more reason why I'm still taking it up here. And so take as risk reward ratio 1:2 risk reward. Let's go here. 1:2 risk reward. Okay, good. 1:2 risk reward ratio. That's going to be your take profit. Okay, so that's going to be 1.3. Now, let's do the calculation. The lot is 4. Okay, so let's do 1.3 for you to know your profit, your stop loss. Your stop loss will be, let's look at it. This is let's go. This is 0.693. Okay. 0.6931. 0.6931. Okay. 0.6931. Okay. Multiplied by 4. That's about $2. $2.7 as your stop loss. Okay. Now your capacity may not carry that, but but why not? So then your take profit will be times 2. That's about $5 kill there. Now you see the market is actually going gradually. Now, but other may have jumped in very fast here. Why? Let me tell you why. Look at your MACD. Your MACD has crossed. Okay, look at your MACD. Look at the cross of your MACD. A powerful cross of your MACD. Now your MACD was confused here. So most time your MACD is not only to find entry, your MACD to help you not to disturb yourself in the market when the market is not actually giving a proper direction. So in this type of market, I won't do anything because look at it. So there is no volume, okay? If you are going to be frustrating yourself, okay? So what MACD do for you is beyond just when it crossover. It shows you volume, so momentum. So you can see now, even with your MACD, with this 1 minute, I'm talking about this instrument. You can still apply this on the other instrument so that to just build your account. So look at it. This one has nothing with news and all of that. So it's simulation. All right. Here you get CD or MACD, right? Crosses above the 50 moving average. Look at the two of them crosses at the same time. So let's say you are finding an entry here, but of course you must have done your proper order to know are we in an uptrend. So if you are an uptrend, so you know that okay, you are good to go. Sorry, let's go here. Like, so say taking an entry, all of this, sweep this liquidity across of this MACD. Some will have taken position here, but this 1 minute, so you shouldn't bother yourself so much. Here you have a close. This candle close above 50 moving average. Probably if you want to even exercise patience after this engulfing, your entry, and then your stop loss below this swing low. Okay, the same way. But another thing that will be a concern here is that this up this thing you are seeing up here. Okay, those are the one we marked recently. Okay, yes, good. It's not, I thought it was a major key level mark before. So 1 ratio, 2 risk reward. Now, I'm giving you one secret here. If you mark 1 ratio, 2 risk reward, be careful. Now, I may not close one position. Let me tell you why I may not close one position. The position you will trail it, okay? You will do what? You will trail that position in the sense that as long as the market stay consistently above 50 moving average, you'll be trailing that market to see where it's going to invalidate its movement. Okay. Just like this one now, you have entered, 1 ratio, 2 risk reward. Okay. And then if you are trading with, let's say, $10 or $20, depending, so you probably can enter two positions. So, but if you are trading five, $10, you just take one position per time. You give you the profit, $1, $2, you close and take your profit and look for another position again in that order. Your MACD now is trying to show like a recover up. So let's see what's going to happen and all of that. So once the market has moved reasonably, so by now you probably want to, if you entered here, you probably want to take your stop loss to trail your stop loss so that you will not be stop out. You will not, your money, you are careful to protect your money. So you just take your stop loss below your entry. That's called break even. So be your stop loss, then allow the trade to run till when you get to your take profit, and then you're fine. Then you are looking for another position. So if the trend continue to move your direction, you're looking at when the market return back to the 50 moving average again for you to find another trade. Okay. So this is very simple. Trading it, building your $5 or $10 account with V50 and using this strategy so that when you build up so much, then you can now be trading other instrument and it can be easy for you. All right, that's what I have for us. If you want to learn more, of course, go to the comment section. There's Deriv's synthetic link is there. Register, fund your account with 5 or 10, $20. Chat up with me, can add you up and put you through more detailed training on how this thing is done properly. And so then monitor your progress and then getting more guidance on how to succeed trading your instrument. Does that make sense? I'm sure you can be fine if you can pay attention and follow the rule as detailed as possible. Yes, of course, sometime you're going to lose some trade. So understand that. There's no doubt about that. You're going to lose some trade because of certain factors and all of that. But don't entertain fear. Don't let fear grip your mind where you jump out of market unnecessarily. So you have tendered your rule and all of that, then you're working with it. But you have to be meticulous. That's one of the things. You have to be meticulous so that you will not waste trade. So if you look at it now, when we come back to 5 minutes, you can see this trade you enter here. So if it were maybe when the market started and all of that, you will have seen that this market, you wouldn't have closed it. You'll be waiting as market continue to trend. So you can imagine now like this type of trade now, let's take it this way, that you enter here and then let's push it up to see how the momentum continue. So it's possible that you are exiting that trade when obvious reversal was about to happen. Let's look at what will have happened on this trade. Only one trade may even make you flip that account. Very possible. Okay, so let's calculate this now. Let's calculate this. All right, this is 4.72. All right, 4.72. And then your stop loss is 0.743. So let's just 0.75. So let's look at this. 0.75, 0.75. That may be up to $5 or something times 4 or $3. Okay, so $3 is your stop loss, right? And then let's go. 4.72. So let's just say 4.72. 4.72 multiplied by 4. That's $18, guys. Yeah, you heard me right? That's $18, guys. So imagine risking $3 to make $18. Does that make sense? Make a very powerful sense. Risking $3 to make $18. Now, you may not find trade all the time, but you have to discipline yourself. So if you are building your $10 or your $5 and you find trade, let's say one or two, three times in a week, right? I'm just using that because if it's what you are doing full time, you should be able to concentrate to build up past that. So you find two to three trade in a week, right? And you make average of $10. Yeah, you heard me right. So, but if you are not meticulous, you will just waste things, right? Certainly, you are going to lose some trade, so you should understand that. So you can be all the time right. Okay. So imagine for somebody who this was yesterday. Okay. So this was yesterday. So imagine somebody who caught an entry. Oh my goodness. Although not all the time the market will trend and do well, so sometimes can be very choppy. And then so it's on the choppy process that you can lose some money, right? So you can see now, perhaps maybe what I said is what the market now want to do here. Say I expect this market to come back to this fair value gap. Well, let's watch what's going to do. Okay, so ladies and gentlemen, so that's what it is, working with strategy and with less risk. This instrument is very less risky. So $5, you can start trading it. So if you are trading with $5, that means you may not be waiting for, those kind of things I mentioned. So that means you may have to be catching once he give you $1, $2, you pick it, especially when you see that the whole setting is still not it's not trending towards your direction as much as possible. All right. And then when the market start trending, like I said, this is 5 minute time frame. So market pull back to 50 moving average and crosses, engulfing candle, you are finding an entry. So if you look at this now, that means it's the same thing. Come down here. This is a pin bar, whatever thing they call it. Then you have not entered. You're looking at let the market after this engulfing candle is your entry. You can see, right? Now the same thing here. Here, the market, look at where your fear will grip you now. Probably you could lose this trade, especially if your stop loss is not reasonable, right? It's very, very possible. It's very, 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 very possible. Look at it. Here you have this, right? And then the market crosses. Look at this close. And then this is an engulfing. It's possible your entry is here. Now let's look at it to be realistic. So your stop loss is going to be below this. If it's not below it properly, maybe just do more minor thing, you'll be stopped out. But if it's below it properly, so you probably will lose this trade. It's very, very likely that you lose this trade. Unless if you narrow down to a lower time frame too. So 1:2 risk reward will not take time. So after the dialing, oh my word, this is so super, super easy. So you don't need to be struggling unnecessarily. So this instrument is good for you. So even if you are now disciplined to say, I don't even care whatever thing they are saying, what I want to see when the market is just crossing below 50 moving average for me to find an entry. That means if you look at it here, the market was doing this, but if you know bit of price action, make a lot of sense. So that means you are looking at this point here. Now, the market, I will have find an entry before this move down here because this is a kind of resistance. Come back to it, reject, and that's a very nice rejection. And then you trade back, okay, 1:2 risk reward. So that means this is a close, an engulfing close candle. So this trade down, that's why I say you have to go to 1 minute, especially if your money is $5, $10. But if your money is $20, you could do this now. This is an engulfing close below 50 moving average. This is your entry now. So your stop loss is going to be big up to this point. So if you calculate it down, it's going to be much money. Maybe up to like $5 or $6. Let's calculate it. 1.4, or let's say 1 point, what do we call it? 1 point. So let's just say 1.5. So 1.5 multiplied by 4. 1.5 multiplied by 4. Uh-oh. 4 multiplied by 1.5. That's $6. So $6. And then 1:2 risk reward. Okay, so you can see this market now didn't get to your okay. Oh, okay, okay. He got there. So, but look at another move. He moved back. Fear, I know fear would not allow you to. You say, oh God, that's crossed above 50 moving average again. You understand? But eventually, what happened? This another sell and all of that. The joy of it is that if you are trading one instrument per time, you'll be able to monitor your trade. But if you are trading too many instruments, is going to be problematic. Okay, so you can see now it's massively pulling back. So there's chance that you are going to exit this trade. The chance is there that you're going to exit this trade. All right, because it's going to stop you out. It's pushing back. Yeah, so let's look at 1 minute. So if you use your trailing stop loss, this pushback will hit your stop loss. That's what it means. Okay, so it's very simple, ladies and gentlemen. Trading with this, you can easily build up your account as simple as possible. Okay, let me go to my boom and crash. So when you are trading, you don't entertain unnecessary fears. Stand by your strategy so that you will not waste opportunity. Okay. Okay, you can see me now, boom, 1,000. I was expecting a spike here. It never happened. I'm expecting another one here. The unfortunate thing is that I may not be around when this spike. Here is a liquidity. Here is a liquidity. Here is a key level. Here is a liquidity. Here is a liquidity. Here is a key level. So these are areas I pay attention. So when they come there, there's still another thing I will do, right, at those points for the market to give me what I want. Okay, so you can see the pullback. So this pullback now, obviously, this is an up close candle. Okay, it has not closed. This is 30 minutes. Still have a long way to go. Probably when it closes with a wick above. See this one close with a wick below. And this one open. I think it first came down. Then, so if we close with a wick above, that would make sense. But I think it first closed down. So perhaps that thing I marked may be where it wants to come back to, perhaps, or come back to get rejected here before selling down. All right, so but you are not waiting in this move now, you will have made some money by yourself. If you go to your 1 minute time frame, then you will have made some money working your strategy. Thank you very much. Go to the comment section, pick the link, register, fund your account, and follow us to make money building account from as low as $5, $10, $20 into millions. Thank you.